Dollar.
Gold versus the dollar.
De-dollarization, I think that's exaggerated. But the weaker dollar, the bearish dollar trade, I think is here to stay.
There's an incredible amount of optimism. I'm surprised at just how much optimism I'm seeing here about the U.S. economy. They believe there's going to be a huge increase in demand for credit due to the strength in the economy. And additionally, they're not so worried about the dollar. A lot of people here think that it was abnormally overvalued when it was trading at 110 on the dollar index. And they remember when it traded in the 80s. So 96 doesn't actually look that crazy to them. Additionally, last year was a great year for emerging markets because of the weakness in the dollar and because of lower interest rates here. And they think that's going to continue into 2026.
Is gold overbought here at $5,500 an ounce?
Gold and silver have been two of the probably most eye-popping trades over the last 12 months, and especially this year. It's hard for me to say how much of that is currency debasement versus investor demand versus price simply driving more demand.
But not as much in the cryptocurrencies. And so how much of this has been a rotation when you look at some of the recent weakness in Bitcoin?
Crypto's been a huge disappointment because, whether it's debasement or geopolitical uncertainty or central banks easing, those are tailwinds for precious metals. It really should be a tailwind for crypto. You've seen the crypto market trying to recover. And in fact, early this year, there was probably some momentum. So I think crypto, if in my opinion, is really watching this huge move in precious metals. There's a lot of FOMO for crypto traders, and I think they're actually buying metals. But in the past, these large moves in gold have actually been a precursor to a subsequent move in crypto.
Half a percentage point increase in the gold allocations by private investors means gold at 6,000. So if you look at private investors having about 3% in gold, if they went to about 4.5%, I mean, you could really be looking at over the next couple of years gold at 8,000. So part of this is demand for diversification. It's also that you have gold demand coming from many different pockets, private investors, as well as emerging market central banks.
There's been a lot of increase in industrial metal demand as well. It's not just gold and silver. We've seen copper, we've seen zinc, we've seen all of these metals move. Part of that could also be because of this huge drive into data centers and the need for electricity, which could be not just a currency play or a dollar debasement play, but it could also be a fundamental play as well.